What's up, YouTube? It's me, Market Moves here, and we're gonna be discussing my top 7 stocks for passive income. First up, I want to talk about Hormel. Hormel is a food processing grocery company, and basically they engage in production of meat and food products, and they've been around for over 100 years. They were found in 1891, and not only that, I mean it's a pretty good stock to hold for longevity. What's it called? Their dividends are at 1.77, which is a pretty fair amount. And uh, like I said, they've been around for quite some time. Definitely uh, worth something to look into, as well as their market cap. Their market cap is at $27.28 billion, and they have about 18,000 employees, which is a pretty fair amount as well, like I said. And considering that they've been able to withhold, or basically they were able to stay up even during the market when the market was at its worst time during COVID. So for our second option, it'll be John and Johnson. And the reason why we're going to be discussing John and Johnson is because this is our health sector. I will say that right now it is a little bit expensive, at least for this stock, considering this past year it did move up $25 essentially, which is a pretty solid move if you ask me. And on top of that, they've been around for over around 100 years as well. They've they've yet to be missing. They've yet to miss dividends payout. They've yet to miss out dividend payouts. Sorry about that. Uh, it's a pretty good, solid company, and not only that, their market cap is insanely high, which is 404.51 billion. Just keep in mind that Hormone, on the other hand, is only a 27.28 billion cap, and their stock price is worth valued at $50. So since this is a health stock, it's only logic that the market cap should be insanely huger, which it is, which is also good. And not only that, they only have about 50,000 more employees, and look at the market cap difference, which is pretty insane. And their dividend yields is at 2.52, which is basically like a 50-50. It has pretty solid dividends, and on top of that, it has room for like growth, as in for new investors to possibly come in and invest more, potentially making this growing the making the stock bounce up a little bit more. Not only that, as well as dividends, so probably a remodel and the dividend change and the dividend yield. Sorry about that once again. But for our third one, I like to talk about Union Pacific, and Union Pacific is a railroad transportation, and this is a pretty solid stock if you ask me, considering that they've been around for nearly almost 100 years as well, and as well as their dividends. Their dividends are pretty solid. They have yet to be missed a dividend as well, and like I said, even during COVID, they really weren't affected too much. As you can see, it did drop from 183 all the way down to 114 at the most, which is a pretty big number. But I know some other companies got rocked very hard, and they did a fantastic recovery. For our fourth one, it'll be Lindblad Expedition. So yes, this is more of a cheaper stock and more affordable for everyone. Uh, it was founded in 2010, which was pretty recently, honestly, but their dividends is are pretty solid considering the price, and as well, not only that, they seem to be a pretty good steady company. They got insanely hit considering it's just a recently new company. For they got hit during COVID, causing their stock from $18 to nearly essentially $3. So this would have been a very nice grab during COVID, but I mean it happens. We learn from that. On to the next, on to the next big opportunity. There's always opportunity out there in the market, anyways. Um, But as of right now, the stock is back at $10. So if you initially got it at $4 and now it's at $10, you've initially already almost doubled or tripled your profit, which is insanely pretty good. Definitely has potential to have more growth into the near future, or possibly getting a little bit half of your initial investment. Let's say it hits around $15, you could probably sell it and get some profit in, and as well just keep it for the dividends. Definitely worth something to invest in if you don't really have a lot. And the market cap is at 505 million, and it only has 650 employees, which is not too bad, and it's pretty solid. Definitely room for improvement or room for growth, I would say. Just this is something you should definitely keep under your radar. I'd like to talk about Coca-Cola. Coca-Cola is a beverage company, which is a pretty much of a no-brainer. Who doesn't know Coca-Cola at this point? It's like literally one of the biggest drinks in the whole world. I believe it's international. Correct me if I'm wrong, but I mean it should be international. So I mean Coca-Cola is pretty straightforward. It's been around for nearly almost 200 years. Coca-Cola has been like it's about one of the best stocks to invest in. It has an insanely huge market cap and it has about almost 90,000 employees. Their dividend yield is at 336 for 49 dollars, $50. That's pretty solid. You'll definitely be getting some nice dividends in return. Uh, as well as you could do the drip, which that definitely is the once you instead of dividends and getting money or buying power, you could automatically turn it into more shares. So more shares, more dividends, more shares, more dividends equals more money. So more money equals more dividends, which means more money. And okay. Well, anyways, you get the point. I mean, Coca Cola is gonna be here for another 50 years. I'm sure. There's no way in hell that Coca-Cola the next morning goes bankrupt or Coca-Cola somehow gets sued for possibly implementing something in their drinks. Hasn't been the first time. So, I mean, if anything they'll probably take a hit if the worst comes to happen, but which I doubt considering how big Coca-Cola is now and how long it's been around for. This is definitely a good buy and it's definitely a good stock that any investor should have in their portfolio. I'm definitely considering of buying some Coca-Colas in the future, but for my sixth stock, I would like to talk about is Apple, and the reason behind Apple is just due to the fact that as well, me going back to saying who doesn't know about Apple. I mean, Apple is one of the biggest companies in the world. It's insanely popular. It's fantastic. The quality is amazing. It's a very competitive company. I mean, Apple just recently did a stock split as well, which was I believe a 4-to-1. So for each stock you had, you got in four in return. So which is pretty solid if you ask me. It opens up new doors for new investors such as myself as to invest in Apple or since it's not as expensive as it once was before, ends in $400 to 125. Keep in mind that it's still the same, but what I'm saying is that now instead of owning a percentage of the stock, I have full ownership of the stock, which is honestly kind of better. I rather just own the full stock than own partially of it. Um, so yeah, guys. I mean, if you scroll down here, their dividend yield is at 0.63. As of lately, it's been changing a lot. I know before COVID, it was around nearly almost 2% or 2 point something, and then shortly after, it got switched around to one something, and now that it's done the stock split, well, it's back to 0.63. So it dropped even further below. But as well, just keep in mind that you do have more stock, so your dividend yields or your dividends shouldn't really change drastically, I believe, or if not, not at all. I might be wrong, but Apple is definitely a good company. I definitely believe that a lot of people, uh, as the new investors, will probably see potential or growth in this company and might start investing in it. So definitely look out for Apple, because I wouldn't be surprised if it moved possibly another $20, another $30 before the end of the year. I mean, just all the stimulus, the money that's been moving around as of lately, pumping the market up, new investors coming in. It's just a mess, but definitely look out for Apple and let me know what y'all guys think. And for our final choice, it'll be XOM, which is Exxon Mobil. And keep in mind, I believe I did put like two gases in here, but this one was more of a curveball, just due to the fact that their dividends are insanely great. Just it's a dying company, of course, but if you just want it for the dividends, it's definitely a hold. Just due to the fact that you're almost getting near $1 in return for dividends, uh, and as well as since it's at $40 right now, it's a pretty good, and it's never been below $32. Chances are that if it keeps dropping, then that means an opportunity to maybe snatch a few stocks, because it does have the potential to possibly go back up to $40 or $50, or just up in general, positive again. What I'm saying is that if it does, hold it, possibly sell, and then get your initial investment back before it ends up dropping. And as well as that, just get them extra dividend, or get that dividend buying power in. So I know what's it called? I know I had bought in around the $32 mark when it first happened, and I bought a few shares, so I was getting a pretty good investment back. Because I ended up going, I ended up selling. Sorry about. I ended up selling my stocks around 40 something bucks. So I initially got my return back, and as well as I got a few dividends come in my way. So it was pretty nice. I mean, definitely worth something to look out for. But like I said, if you want to be risky, then go for it. If not, play it safe. Then I would probably say nah, not really. But keep in mind you are investing, so this is your money. I highly recommend you to possibly throw this one out of the way and keep these other six in mind. Well, those are more solid and trustworthy and towards the safer side, as in what's it called? As in these haven't really missed a payout, but ExxonMobil, just due to the fact that it's more of a dying company and everything's going from oil and gas to electric, you can definitely see all oil companies eventually dying out, and companies such as Tesla, Nikola, and etc. Bouncing back up or bouncing up. So that'll be all for today, guys. Make sure if you like the video to drop a like, comment down below. Make sure to subscribe and smash that like button.